Good morning. Looks like I killed the music a little early. So we're going to go over the pre-market analysis. I've cleared off some of the boxes and lines on most of my charts, going back out to the 4-hour and found more recent areas. So I wanted to share those and go over, where we're at. There's several of the instruments that actually have set up pretty nicely to trade today. So I'm pretty excited about that. Gold, of course, with its all-time high, yet another push up there is like a flag on Mount Everest right now. So we don't have anything up above it to draw as a resistance level or target. So you'll see me go down, and we can find that on a smaller time frame. So because a lot of times whenever these things push one way, they're going to pull back eventually. We don't know when. That's why we leave those runners on. And with gold, especially, back in, I think it was 2011 or 12, somewhere in there. I think it was 11, actually. Gold was reaching $1,000, and I was buying it from the public and traveling around the country. And when I was buying it and buying gold bullion, it was at around 900. And then, it was approaching that 1,000 mark, and we were talking, is it going to break 1,000? Will it ever get to 1,000? It's going to break 1,000, and then it shot up past 1,000. Then it fell back below 1,000, and then it shot up to about 1,500, and then below, 1,200, and then up to about 1,700 and below the 1,500. So that's what we see typically with gold historically. So that's what we look to happen in the future, is gold to keep climbing like that. And we see it push past and make an all-time high and then push back down to go fall back down where it was. So right now it's making an all-time high. All right. So again, as we look to trade it, we right now we don't have anything, and we haven't had a downtrend line in gold for a while off the highs, just because it keeps climbing. So there's nothing to draw off of. So let's jump into the charts here. So first off, we got platinum, and I'm going to run down through the charts as we go. So basically, again, we start at a 4-hour time frame. Now I do have a downtrend line, and you'll see there's a point right here. That downtrend line is drawn from this high up here clear down to this one. It was off this one right here, and then I ended up moving it once it made that this new high here. Kind of pushed it out a little, and I don't move them when price is pushing up past it. I wait until they pull back. Okay, once they pull back down, then at that point we can say, okay, that new high is established, and we'll move our trend line. So that was the downtrend line we were trading. And then basically we had a 4-hour line down here. Now this line here, that is a 4-hour uptrend line that's been intact for a while. Okay, it's basically out here from this low way back here, and that was 2020. Is that right? Yeah. So there's the low, and then every time it's fallen back, we've been able to put that, at one point that line went to this point. Okay, and then when it made this point, and then this came down past it a little and then shot back up. Well, then of course you move it to that point. Well, then over in here, this pullback right here, that bounced right off where it was. Again, the trend line was here to here, extended out, and this pullback, bounced right at it, pulled back up, and finally broke it. So what happens is every time it pulls down past it and pulls back up, that's the time you can go ahead and move it. And that's where we're at on this one, where we're at now. So it just keeps pushing that uptrend line down, slightly as we go. So I hadn't moved it yet this morning. I did, but I wanted to move it back where it was so I can come in and show you guys. So right now, since we have this push, and this was yesterday, but I was out. So what I would have done is, when it comes down, hits here and goes back up, well, then at that point you can move it. So here's something I think some people are struggling with, not really struggling with, but I want to say maybe forgetting about as we day trade. So, you should trade with the higher time frames in mind, the 4-hour, then go down to the 1-hour, and then the 15-minute for your analysis. And then you could trade on the 3 or 5. If you're trading on the 1-hour, you should be looking at the daily and the 4-hour. That being said, I don't think anybody really looks out as the candles form. So I think that's what I want to challenge you guys to do next week, is the ones that are down on a smaller time frame, and you're going out and doing your 4-hour, 1-hour analysis on down, but you trade on a 3 or 5 or 10, whatever it may be. What I want to challenge you to add to your strategy, your daily duties, because again, this is a job. You've given yourself a job, okay? You want to be self-employed. This is a great way to do it. Treat it like a business, but you have given yourself a job. So you need to treat it like a business, a good, solid business, have a good, solid business plan. So you should have rules in place. One more rule that I think that everyone should have is every 4 hours, look at the 4-hour candle and where it's at. Just do it. So you're down on a 3 or 5, and every 4 hours, for me, it's 6 a.m., 10 a.m., 2 p.m., and so on, and then 6 p.m. and 10-2, 6-10-2 for me. So look out at the candle. So at 10 a.m. today, go out to the 4-hour, see where that candle closes, because sometimes you lose sight of where where things are at in the big picture. Okay. So we had a support zone here, which as you look, we draw the zones off of swings, really good, solid swings. You get a good, solid pull in one direction and it pivots and turns and gives you a decent swing back. That is a price that we need to be aware of, because that's a possible turning point in the market. Now, this one happened to go past that, and it went past our trend line, because the trend line was drawn up here. So it even went past that. But all it did, if you look at the 4 hours, a 4-hour candle closed below, another 4-hour candle. This one came back to test it, did not break either level. And then the green candle pulled back above. So that is our new swing low, basically, that was established yesterday. So that's where this zone is right here. Now, I can leave this one on if I want, but I'm not going to. I'm going to take it off, because market decisions are made by market makers. Market makers, they have their price points in mind, where they want to buy, where they want to sell, where they want to buy and take profit when it goes up, where they want to sell and take profits when it goes down. So they have all these price points in mind. They're willing to change those over time. So what happens is these will change for us. So we typically will go back and look for a zone on a nice swing, and we're drawing off a 4-hour wick is what we're drawing off of. That's off a wick, that's off a wick, that's off these wicks up here. So that's what we're drawing off of. We don't include the wick and draw a dead set line like this one, because a lot of times, if you look at the 4-hour wick, that's indecision in the market's what is considered, where it's the bearish and bullish side of the market still moving the market. But the 4-hour candle stops here. I'm sorry, guys. I'm still not back 100% from being at the hospital yesterday. And we do have some furniture being delivered today. So if she comes down to get me, I'll stay on live, but I'll pause it or mute my mic for a moment. It won't take long. I just got to show the guys where to put the stuff. So again, that's why we draw the zone. So this one's been remarked. I mean, I had the zone here. A lot of these I went in and cleared zones off and drew new ones, okay, on more recent swings. So these are recent swings. I mean, this one goes back to what? That was May 20th. That's as far back as I really need to be concerned with, because I found a really good high. We have a low that was established yesterday, and then we have a mid-level here, and then I've got this other one here. So right now, that's considered to be my high for the day. So as I'm down on a 3-minute, 5-minute time frame, I don't really care about this high up here right now. That's why it's gray. That really is not come into play. Right now, it may not come into play at all today. So it's grayed out. The main levels I'm concerned with right now, obviously, it's pushing up. We're in a couple of us are already in platinum. So it's pushing up. So where's my target? Well, my target is up here. Ultimate target, right, would be way up here. But is it going to get all the way up here today? I would not think so. Okay. So this area up here, not really concerned with right now, because it has to break through these levels first. And look at how it didn't over here. I mean, it pulled up, pulled back, that made that wick. Well, then this pull up here, 4-hour candles again, turned just below that. Okay, so it held up as resistance. So is that level, as we're climbing today, if it keeps climbing, is that level going to hold up as resistance? There is a strong possibility. Strong possibility. So let me stack the odds in my favor. And when it gets up there, if I start seeing a bearish pattern form, bearish structure form, okay, and I might even be able to draw a trend line up on a smaller time frame. If it goes up there, again, if it goes all the way up there, and then it breaks that trend line, if I can draw one, depends on the moves, if we can draw one or not. But ultimately, as long as it's making higher highs and higher lows, I'm going to stay in long. I'll stay bullish. If it starts making if it starts rounding over and making a lower low, lower high, then guess what? I might have to get out of that long and go short. Hopefully, I would love it if it pulls all the way up, and that's where it makes lower low and lower high. Why? Because I'll get in short and trade it back toward the bottom. Okay. Right now, we have not had pullbacks. We got 3-4 hour candle, or sorry, I'm on a day still. We got the daily candles. So this was yesterday. This is the start of today of what we had. So if you go down on the 4 hour, it did basically break through that zone, test the zone, which held up as the mid zone here, held up as support. It even tested the bottom, wicked down, and then we've had a strong push up. So right now we're in a strong bullish, momentum right now. Couple trend lines I would draw. I would draw one here, come from this wick, and I look to draw one here and say, yeah, I could see that. I want to make sure this wick's included, which it is if I draw it here. So that's going to be kind of my outer uptrend line. Right now, that would be my main trend line. Okay, I know it's out there away from where it is, and I'm fine with that because we get those. We had one over here. So we had this downtrend line, which was drawn way back. And basically, as we're day trading, we'll have trend lines in here as it goes down. But we should have been shorting, and we have been shorting. Shorting was our best play. And then, of course, we can trade these retracements as well because we're on a 4 hour time frame. So it's okay to trade in both directions. But the main direction was short because it was heading short. We were in a bearish formation. So shorts were in your best interest, but you can go long on the retracement. You just wait for stuff like this where, and I'm looking at a 4 hour, but we'd be down a smaller time frame where you can see right here, we have over here, this level of support, that price level support. It broke through, came back up, tested it as resistance, ultimately went back above. But once that price level's broke, you can see where it went. Okay, it went up. So we can trade and get in on that. And to me, that's a retracement because overall on the higher time frame, we were in a bearish movement. Okay, so the market was moving bearish, it was moving down, and we can get in on those retracements because there's room. There's room for it to go to the target. So anytime you get a push, you get a pullback. You'll get a push. You'll get a pullback. This one happened to be huge. So that's something you have to be careful with because they don't always, what you love to see is this right here. Pushes down, pulls back. Pushes down, pulls back. Pushes down, pulls back. Pushes down. Well, it pulled back. And then when it failed to really break and hold below that level, guess what? It pushed all the way back up. Went 2 levels back. Okay? Or 3 if you look at this one. But basically it went back several levels, several highs. And that's what you're going to get. You're going to get the bigger swings. We don't know when those are going to happen, unfortunately. There's no rule book as to when they're going to happen. That's why you have to watch the structure build up on these. So right now, I'm already in platinum. And I know a couple other people are. We know who's in it. Old MC's still in platinum already. But right now, I'm going to try and hold that as long as I can. And I don't know if that's going to be the rest of the day. I don't know if it's going to pull back and test this. I can 100% see it pulling back to test this level. And where I got that one was from, it's not necessarily back here. That's where I started the drawing. That's it. That's only where I started the drawing. The reason what I was looking at when I was looking, just take that off, was as we were up here, and I already had a line on my chart here, but as you see an instrument break a previous high, you look back and go, okay, is it going to stay above that high? How well was that price right here? How well was that price respected? And I look to the left and I say, okay, this was a little higher, but basically around the same. Swing up, swing down, swing up, swing down. Okay, that looks like a decent price to me. And I'm looking for an area of support is what I'm looking for, because we're past that level. But if it starts pulling down, is it going to stay above that? So we're looking for a level of support. So again, we see that high, we see this high, and lo and behold, we look back to the left and there's a low support. So this was the area of support over here, which even held this up. The market still, they don't always touch that price level. So it held up for support for a while. And if you look, it bounced here at July 1st. Came back around that level July 9th, and then several days in between. And then here, it almost got to it again on the 16th of July. So from the 1st of July to mid-July, it stayed above that price. And then July 18th, a couple days later, it actually broke through. Well, when it broke through this level, what did it do? It pushed to make a low and came back up close, came back up to test that level, pushed further, and then came all the way back up through those three highs to test that level again. And then it made a good push down. So if you ignore the smaller swings, what you got is a big, huge, right here, top, bottom, top, bottom. So big, huge swings. So we have the littler swings, and then that's where you see these big pullbacks sometimes, is after a couple pushes, well, then the bulls stepped in and pulled it back. So let me draw that zone back. And again, it's off the wick. This wick bottom here to the candles, bottom of the candle to the wick. So that right now is my mid zone. We go down to 60, go down to 15, look at what we see. Okay, so I can see that, again, this is my outer trend line. I don't need this on there anymore, but that's my outer trend line right now. And I could see a definite, we have our point here, our third touch point on this trend line. Well, I could see this, you can't miss that, little swing low right there where it barely pulled back. So I want to draw and be aware of that level as a trend line. So right now, that's really my inner trend line. I don't always mark these anymore as inner and outer, but what I would do is get your trade line up or trend line. That's actually my trade line. My trend line's back here. I'm going to look for that to hold up for the day because I'm already in long. Whether it does or not, I have no idea. Okay? No idea if this trend line, trade line is going to hold up and send it up to this target. I have no idea because Platinum will do its own. They all do their own thing. And it's based mainly off of price levels. So most instruments, the market makers aren't using trend lines, okay? They're using price levels. So we have to be aware of the price levels. How do we get their price levels? We don't know. I don't have a hotline to any of the market makers. I wish I did, but we don't. They're people, corporations, companies, big banks, one of the 7 big banks, countries. Those are the market makers. They trade off price. They get in and get out off price. They have a certain acceptable buy price. And then they have a price. Oh, I had an order somewhere I didn't delete. And then they have a price they want to close at or sell. Trying to find an old order I had on here marked. I can't find it, so I can delete it. So anyways, down on the 60, that is what I want to draw as my trade line. That's for the day. It could totally collapse and go through that. I'm fine with that. Right now, as I'm setting up, according to my criteria, I'm in long. I got in long when it pulled back and hit the top of the zone. And I think that's where a few others got in it as well. So I wasn't in any of this. You know, it broke through the top of the zone, tested it a little bit, hung out, went back to test the bottom of the zone. And I didn't have this trend line there, but we could have. You know, we already had this low and this low, and tested that area, and then shot up, gave us that push. And what do you expect after a push? After a push, strong push, you'll expect a pause or a pullback. The pauses I call a stop and go if they don't pull back. So to me, it's called a stop and go, but you expect it to pause, hang out for a while, a little sideways movement, and then we got a pullback, and that's where I entered. And not on this time frame either, not on the 1 hour for me. So for me, I was down on a smaller time frame. Now I'm down on a 3 and 5 for entries. That's the 5. So I'm entered on a 3 or 5. So I actually did not enter this until, and I got in a little later than MC. I just got to use you in here as an example. I hope you don't mind, but MC got in it. I think it was 90. What was it? 90.0 or something. Mine's like 91 something. What I did was, you'll see, again, it pushed up. We had an extension, pullback on a smaller time frame, shot back up again here to do what? Shot back up to test this price level. And it failed to break it. So if it fails to break it, what might happen? Well, it might hang out sideways for a little while longer, or it may pull back. Those are your two. It can always break it. So what I like to do is sit there, you know, as it was pulling back up, I would draw this horizontal line, set an alarm on it. That way, if I'm looking at another instrument or looking in Discord or whatever, I have that alarm to go off. So definitely set an alarm waiting for it to break. Well, when it pulled back, it didn't break. And then you would set an alarm here as well. Anytime it makes a good high and a good low, go ahead and pop an alarm on there. Just be aware of those price levels and watch how the market respects those levels. Okay. So we had a further dip back. It broke the low, came down, and it turned on this trend line. Remember, this trend line is not drawn off of this point. It's drawn off 2 other points to the left. It just happened to drop all the way back through the zone, testing the bottom of the zone, which held up here, multiple times. Again, multiple times it held up, and our trend line happened to be there as well. Okay, on the shorter time frame. So when that bounce happened, it pulled back through the zone. I was looking for it to break this high, this wick high right here. That for me was, if it can break that price level, okay, because I'm looking at the swings up and down. So it swung down, pulled back, and made that wick high. And again, this is a 3-minute candle, and then pulled down through. So as it pulled up, I'm waiting for it to break that level, because look here, I've got room in there where it just, nothing in the way. Okay, nothing in the way. So I'm going to get in, and I got in there. I think it was that candle right there. I got in on that candle. And then of course my targets, you can't really do partial on this, on targets. So the market makers don't particularly look at time frames. I think their it's daily, weekly, monthly levels. They're not down on smaller time frames, and they're solely looking at price. What's a good price for us to buy at. And then also, guys, other things that move the market are big corporations. And when I say big corporations, I'm not talking about the piddly little corporations. I know in the Forex market, you'll see a lot of things move off the currencies, because I remember some of the big moves in the past. And one was a big GM play. And what happens is when a U.S. manufacturer, car manufacturer, goes to order parts, and they order parts from Japan, do you know what that Japanese corporation or vendor wants paid in? They do not want US dollars. Guess what they want? They want Japanese yen. Well, guess what that does to the exchange rate when a big mover exchanges funds like that? It moves the market. So sometimes you'll get an unexpected move that nobody knows where it comes from, and you look in the news, and that's what happened. Something happened like that. So it is something to be aware of, that it's not always just the news that we know is coming up. It's also transactions. Currency pairs are very transactional. They move off that. And if you do trade anything like oil, we get a lot of oil from the Canadian government, so from Canada. So if you see news coming out for the Canadian dollar, what do you think that does to oil? It moves oil price. So those two are kind of intertwined, the Canadian dollar, oil price. So again, I always know when Canadian news is coming out, and I love trading the Canadian dollar because, again, it's tied with oil, and I love trading oil. So right now, again, that's our trade line here. Something steeper I would draw, because now we're on a 3-minute. So now on a 3-minute, I can come in and look to draw another, like a steeper trade line that I know will be broken. Yeah, they do dump a lot of money into their own currency. I know. And we never know when some of that stuff's going to happen, unfortunately. So we can draw a steeper line. Now I'm going to show you this. Right now I could say, oh, that's my line. Oh yeah, that is where I want my line, right there. That's where I want my new trade line. Just follow that. But let me ask you this. When I got in here and it pulled back a little and then shot up past this high, where would my trade line have been? This area right here hadn't formed yet. And this is why I want to show you this. This is where my trade line would have been. Right there, off this wick. I need to move it a little. What did it do? Attached to the wrong candle. No, yeah, I need to pull back right there. So that would have been my trade line, wouldn't it? Not this. Like I said, right now, I'm looking at the chart going, yep, there's my line. Just follow that the rest of the day. However, that's not where I would have drawn it. Again, as it shot up, once I got in, now I would never draw one that steep. I got in, you wait for a new low. We have a low back here, and then we just have green candles. So green candles, after a low, it breaks, I get in. I really don't have an area to draw a trade line off of. We have to have a new high or low established. Here's the low. We need a new low established. This low right here is not really established till we get a push. Well, we got a push. So once this candle starts pushing up, you say, okay, there's our swing low. So again, this is where the line would have been. So what do you see off that? I see it actually broke it. It broke through that line, okay, and just kind of went more sideways than anything else. That is not a break of a trend line, and that's why I wanted to show you this particularly, where it would have been, where it was when you get in the trade. Again, it's nice to sit down now and go, okay, well, that's it. That's where it should be. However, when you got in the trade and it pushed up, you say, okay, new low established. Let's draw a trade line. It went up, went sideways to it. You're expecting a bounce and a push. Okay, came back, hit it. Nice push up, another green candle, a couple more green candles. You're thinking, man, it's go. But then it broke the trend line, broke that trade line. But again, that is not the time to bail. It even formed a red candle. That's actually an evening star. Not the best looking, those three candles form an evening star. But I'm on a 3-minute time frame. So candle patterns don't hold up as well on lower time frame. But again, is that the time to take the trade short and bail my long? For me, no. One, I have a resistance level here that I would expect would come up as support at some point, and it kind of pulled down to that. So I'm not going to bail till it pulls back below that level. So to me, and even if it gives a red candle, if this red candle would have came and closed below that, I'm still not going to bail. For me, I have to see the structure build up, because right now, again, if we zoom the whole thing back to our original line out here, it's been bearish or bullish. Sorry, it's been bullish overall. So in my mindset, I'm thinking bullish on the day. And when it came down and pulled here and pushed up, well, I'm bullish on the day. What do we got? 91. I don't have my trades on here. What I got in at 91 something. Oh, way back here. Well, it's peak. Let me go in the right area here. Peek out at it. So let's move my stop, because we're up quite a bit. So unfortunately, platinum doesn't have any micros. So you're stuck trading one. So where am I going to move my stop? I have several levels I can move it at. One, just move to break even. That's not impressive, but I would take that any day over a loss. Okay. So I can move to break even, a little better than break even. I'm not looking for that profit. Whenever I move to break even like this, I'm not looking for that little bit of profit. That is not what I'm doing by keeping it around here and moving to a break even. I'm giving it room to move. Okay. I'm not looking to get that little bit. That ain't nothing. So, but moving it to break even is better than getting a loss. Okay. It broke this price level. And if it pulls back to that price, because these are pretty steep moves, if it pulls back to that price level, guess what? I want to keep my stop out of the way. And when they come to these levels, support resistance levels like this, you don't expect them always to turn right on a dime. You know, turn right at that level. So be aware that they typically can pull through, or you'll see a candle wick pop through. Okay, testing a little bit lower. So I could see moving my stop here and keeping it below most of this right here. You see all these lows across here? And that's where I think I want to leave it. Am I up? I mean, I'm up 645, 650, and that is not, what is that? Maybe a third of the move. That's probably about a third of the move if you look from there to there. I don't even know if it's a third. We're going to find out. Let me tag that. Oh, it's putting it at the whole wick. So you're looking at, what is that? 120, 126 is the whole move. I can't see this, the price or the points. Ugh. Sorry, guys. I got to turn this magnet off. That's what it is. Sometimes I love the magnet, and then other times the magnet is a nuisance. There, we're getting another push. So we're actually going to be able to move some more. All right, so here's where we got in. So right now we're up 143 on that. We're up $700. So 143. So right now where the stop's at is at 35. So we're not even up a third quarter right now. So now that it keeps pushing, I don't expect it to pull all the way back. It could still, but I'm actually going to move. Yeah, $200 is better. And guys, you guys, I was going to ask everybody if they were ready to get their daily goal today, your daily trade goal, whatever that is. So I'm going to move it there. It's aggressive because I know if it pulls back and tests that level, it could stop me out. So it's hard to do platinum when you can't close partial. The only way to close partial is if you put, 2 contracts on or 3. I like scaling in to platinum, and I could try that here. Who wants to see me try that? Who wants me to go for the scale in play on platinum today? And it's going to be a win or lose, because when I scale in, my order is going to move. And if it comes back, I may not make anything. All right, let's do it. So it's moved far enough right now. If I place an order on, it will move my order. So what I like to do, though, is have my stop protect the whole order. If I can put on one more contract, now, and this is what you have to decide, because right now I'm up about 675. I have to decide, do I want that bonus money on the Friday? What do they call it? Free money Friday? Do I want to just capture that for the bonus? We've done good all week, and we've already got runners that we've made money on this week. That right there is a bonus. And again, hopefully everybody's decided how much they want to make per month. So if you're looking to make $4,000 a month, well, that's only $1,000 a week. This one trade is up. It was up almost 1,000. We were at 700. So anyone looking for 1,000 a week could have just closed that out. Hopefully you've made 3, 4, 5,000 maybe earlier this week through the week. So Fridays is what everyone's been calling free money Friday. So if you've made your weekly goal to get your monthly paycheck, whatever you're looking for per month, well, then this is a free trade. So like for me, I don't need this trade. Could I have closed it out at 700? Sure. Then what are you going to use that 700 for? For me, it's a bonus. I like to stack these up. So all my runners, all my bonus trades, those stack up for a bonus paycheck at the end of the month. That's just anything above what I need to live off of. Okay. So for me, I need 10,000 a month. That's what I have to pull out. So that's 2,500 a week. So this is a bonus. Well, the bonus was up 700. So I could have closed that out, got the 700, and then next week I'm already ahead of the game because I've got 700 already locked in for a bonus. So a lot of times your bonus trades or your runners will override your losers. So if I add a contract on, it is going to move this trade. That's what you have to keep in mind. See where it moved it to? A little bit better than my stop. So it's great. Now I have 2 contracts on. However, I have to do this because I want to protect that trade. All right. So right now, I've got 2 contracts on, which is awesome. This is where you want to be. You want extra contracts on. However, I full well know that this may pull back. Boop, and do that. All right. It could. And it's going to stop the whole thing out. So that's one thing you have to keep in mind when you stack in or scale in. And unfortunately, we never know when the end of the move is. So I've been in trades that have been trending for the whole entire day. What was it a couple weeks ago? Was it oil? Oh, Bitcoin. No, it was Bitcoin. Bitcoin and oil. It was the same day. I can't remember. It was Bitcoin and something else. But they were trending down. Well, as it fell, as Bitcoin fell, I got in. I think I got in at a decent quantity contracts, closed out some. But then when it would pull back, I would put on more. So every time it pulled back, I'd put on more. Pull back, I'd put on, and I would close them out. That's a whole separate trade. So right now, I've added one contract, and I would like to do this. I don't remember which one of these candles it was. We'll just call it up in here somewhere. So I like to mark these. And I'll show you why. So I'm going to mark that I added one contract here. And here's why. Right now I added one contract there. My stop's really irrelevant because my stop's protecting the trade. So this is a free contract. Yes, I'm going to lose. If it pulls back right now and comes down here, I get that I'm going to lose from where I entered to here. If this was a brand new trade, I would not have entered there. If I was looking to get in platinum, that would not be the entry because my stop should be below the last low, about where it is. Should be below that. So that's a risky trade. That's a huge stop loss. Where I got in, though, was a free contract entry because my stop, I was able to pull it above where my order was moved. So that's what you have to be careful with stacking in. So the reason why I want to mark that I added there, how much are we going to go for on this extra contract? I could leave both on to go the whole distance, or I could close out the one I just added at X amount, okay? Because that is to me, I look at that as a extra trade I just placed. So I just placed a trade in platinum, one contract, and it's free because it's protected by my stop. And if it pulls back and hits them both, knocks them out, I'm okay with that. However, right now I look at that and say, where do I want to close out? Where do I want to lock it? Or do I want them to go all the way up? Because we do have a level up there. The other thing is I'm going to move this. Remember, I mentioned that that's where it was. It broke and went sideways. Only when structure builds after the break of a trend line. Yeah, bonus on a bonus. That's pretty much what this is. It's a bonus on a bonus. Let me go out to I thought I had a level right there. I think it's way up there. Yeah, it's way up there. So I really need to find some levels in between because it is not going to go all the way up there. So let me go back out to the 4 hour. I know it's kind of messy here. Yeah, I'm really not going to be able to find. See this mess over here? It is not always easy to find a mid-level or price level. I mean, this is messy over here, and that's what we're in. So it could turn at any one of those points, unfortunately. I see where price is right now. Well, that's my order. Sorry. I see where my orders are. And you could see that every time it pulled down, it hit that level. So there is a real good chance I will be taken out. Okay. Here's where price is right now. So as we're looking for support or resistance, there's really nothing there that we could say is a good level to be aware of. So I'm just going to mark this one on the end. I'm just going to mark those candles right there. And then I'd go up and mark the wick up above. I'm looking at these levels as my price projection points pretty much. Those levels are what I'm looking at as far as my targets from where price is, because price is right here. We already know that if it turns, I don't need to mark, I could mark right here if I wanted and say, well, if that holds up, it's going to keep going. Well, I'm not interested in that because I full well expect it could come down, hit my stop. So I don't really care about that. I'm looking for levels up here that I can mark on my chart, that if it goes to each of these levels and breaks that level and comes back to test the level as support, and then it goes up, I can move my stop under those levels. I like to mark these. These are drawn on the 4 hour, is where I just drawn them from. So I like to mark them that they are 4 hour zones or price levels. And we'll get to some of the other instruments here in a minute. I didn't know this was going to break. So that's why we're kind of stuck on it for a minute. So those are my support and resistance levels. So again, we're looking for it to go up above. And if it breaks them, come back and test those levels. And it should be coming up to one pretty soon. They're still out there ways. Oh yeah, it's up there. So we're getting a good climb. And I could go down to a 60 and try and find one between where price is right now and that 4 hour. See, there's, ooh, don't like that. That's where we're at right now. Right now it is testing this low. Don't like it. Don't like where it's at because it's right there. I'd rather see it above that, but that's where I'm going to mark my line. It's got to break this before it goes any higher. So we have, and you could draw a little zone there if you want to be aware of not just the bottom, but the inside of the bottom. So there's the bottom and there's the inside of the bottom. And you could draw something like that. To me, that gets too many boxes on the chart. So I really just want to come in and mark the low of that level and say, okay, if it breaks that, then I'm going to look for it to come back and test it. And if it holds up as support, well, then we should be due for that rest of that bullish push. So we'll see. We'll come back to this one. All right. Yeah, see, it's right there. So now I know where I'm at. And that's what's key about drawing these. And again, you want to go out to your 4 hour and then down to your hour. I didn't go down to the hour to draw this. I didn't expect it to get up here when I got in it. When I got in it, I expected it to stall here, which it kind of broke through and tested for a while. I'm kind of stalled out and went sideways for a while. And that's that flag formation that you guys often see. I always love to see the flag formations form. Basically, you're just looking for a high and a low. Once you see that the price keeps hammering at a level, then you could draw something like these flag formations. And it's going to break one way or another. I don't like to leave them on the chart, though. So right now, it's coming back and testing that level. Smaller time frame support. That's going to be it right there for me. So we may actually see, I may have to close this out. So again, we haven't seen much of a good move. If you guys see me swatting in the lower left of the screen, we got a fly in here. So we never know when they're going to pull all the way back. So I'm in it. This is a bonus trade. Again, depending on how much you want to make for a week or what your weekly goal is, this could have been a whole week's trade for a lot of people. I'm going to close my trade off there. I don't like those getting in the way. You guys know I'm not afraid to show them. I show them in all my pictures. We'll come back to it. So we know where it is. We know where we're at. And it is breaking our trade line. So here's something, again, remember this trade line was drawn from there to there. And it broke it. I mean, it broke through, traveled up the backside. It wasn't ready to start going short. So that's the only drawback that I've ever had to trading trend lines. I've been trading trend lines for, well, it's been decades now. The only drawback I have to the trend lines is that on smaller time frames, when you get into some of these pullbacks, sometimes it is just a pullback. It breaks the trend line, Okay, it's breaking the trend line. We just have this candle open on the other side. I wait for the candles to close. What I would wait for to say it's going bearish, unfortunately, I wait for the setup. I wait for the bearish structure to form. And that is giving back some of the profit. So if you look, if it pulls down, pulls back up, makes a lower high, pulls back down, makes a lower low. Well, by the time it does all that, you're giving up some of the profit where you're at now. Okay, because we were in down here. Now our order's up here somewhere. So yes, you're giving up more of the profit to wait for structure. However, if all it does is pull down and make a low and then keeps going up, well, then you're in for the ride. So that's where, as a trader, you have to make your rules. Everybody has the basic set of rules to this, how you look to take the trade. When it comes to trade management, a lot of people will do things a little different, and that's okay. But you need to have it wrote down, and you need to have a strict structure to how you're trading the trade. I don't really go over this either. As you get into trade management, you can, let's say you had 10 contracts on and you closed part of your position out at close partial. Let's say you closed out 6 and you had 4 on. You could, when it breaks the trend line, close out part of your runners if you wanted. That could be part of your additional exit strategy. Okay, that would be an addition to your exit strategy. So when a trend line breaks, you don't just freak and panic and say, oh, I'm jumping out, and you close it all. Because I know you guys have seen several times where it'll break a trend line and then just keep going up the backside. Okay, gold did it yesterday on one move. And then finally it went short, but it went up for a while up the backside of a trend line. So knowing that that happens, if you again put on 10, closed out partial, closed out 6, well, then now that it's broke the trend line, looks like it's testing the back of it, would you want to close 2 more? Close 2 of your runners off. Lock in the full profit you got on those right now and say, I'm doing it. I'm going to close out 2 because that's good swing, good profit. I know, this is the kind of stuff you got to say to yourself. I know that it may just be a retracement. It may just pull back here or here and then bounce and swing, go long. And I'm okay with that. I'll leave 2 runners for that and move your stop. And it's either going to stop me out or it's going to swing back and then just keep going long. And I'm okay. So you can close out additional runners when you see the trend line broke. This is what you got to remember, because we never know when they're going to turn. Remember, this trend line was here. So if you got in this trade, and I'm using 10 as an example, nobody should be putting 10 on platinum. So if it had a micro and you put 10 on and it popped up to this level, because it may not go past that, you closed partial, you closed out 6. And then when it pulled through the trend line, you'd say, uh-oh, trend line broke. It's not really breaking this high over here. Red candles. Do you bail? If you would have bailed and closed out the other 4, you will kick yourself because of that right there. Everyone would. I would. So if I just bailed on the whole, if I put on 10, closed out 6, had 4 on, it broke a trend line. I got red candles here bouncing off of this high. It failed to break. Boom. For a lot of people, that's a short signal. But for me, it's not, because I like to see structure build up. Again, that is not structure. It came up, formed a high. I got a red candle. It tested the backside of the trend line. That's great. But again, right now, we have low, higher high, higher low, higher high, higher low. Higher highs and higher lows are bullish. That's bullish structure. Well, I'm not going to trade short against bullish structure. Why would I do that? I'm trading against the market. So that's why you guys will hear me recommend time and time again, wait for structure formation to build. Wait for you know, a low, a lower high, and then you can get in short. That's what I wait for. I wait for that structure build up. And yes, if you're already in one direction, you're going to give up some profit waiting on that, but that's a safer play. Okay. So if you were to get in on something like that, one, you shouldn't be trading with your full contracts. That is not enough. That's not structure. It's a break of a trend line, test of the back of the trend line, and support level or resistance level in here, and that's about it. And you got your red candle. But again, I would have never done it because of this. I had this support resistance level from over here. So that's what's key about drawing those price level, is that would have kept me out of shorting. And then also, I don't have a lower low and a high. And then you get this. So again, if you just trade getting out when a trend line's broke, you will kick yourself when it does those pullbacks. I'm going to adjust this line out. The line's here. Well, I'm leaving it, actually. I was going to adjust this out here, but if you see what's happening, it did hit a support resistance level. Pulled back, made a low right here at this price level, and we're breaking it. We may just be staying on this for a while. So right now it is trying to break this price level, which is basically off this high, and you can see we bounced here. So if that breaks, right now again, break of a trend line, testing the backside of the trend line and support resistance level, but that technically is a lower high. If this does not hold up, if it comes and makes a lower low, I'm going to wait for a pullback. Now that does mean I will miss out on some of the move if it breaks and runs. So I used to do this. I don't do it as much anymore. And right now, by the way, our added contract is not up anything on its own. I used to put pending orders below here. And I'd put a pending order below here in case it breaks and runs without me. So I'd put a pending order on here with less contracts. So let's say you normally trade with 10. You can put a pending order on here for say 5 or 4 or 2. And then ultimately you're waiting for it to pull back and form a lower high. But the pending order for 1 or 2 or whatever is on there in case it breaks and runs. That's a little riskier trade. So I wouldn't put on your regular contract size. Now, how I would do that here, if I was going to do it, is I would come in and really, kids, you'd have to pick your poison. And I need to put this on 2. So I would put that on 2 contracts. I need it on 2 because I have 2 on here. However, you can always put on an extra. I'm showing an example. Okay, so right now I have 2 on. We're up 775. I still want it to go bullish. We got a target up there. However, we had 4-hour, or we had a support and resistance level. I think that was off the 1 hour. Support and resistance level there. So it may hold up and it may pull short. Right now it has to break this price point. I could put a pending order there in case it breaks and runs without me. It's highly risky to do this. So I know you guys have seen it, and that's kind of why I want to cover it. Okay. Because you guys have seen it where it'll break a support level like this, and it just boom, 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 3 or 4 candles. It just plummets. All right. Like a sinking sub. And it goes down and you're thinking, man, I should have traded that short. But where do you get in? You have to know that doing this is risky. Okay. Getting in right there short is risky. It's on an extension. It has to extend to put me in. And getting in on extensions is some of the worst places you can get in. But if it keeps running and you want to be in that, you would put on an extra contract on your stop. So right now what this will do is it'll close out my 2 long and it'll put me in one short. I don't recommend doing that with platinum, what I'm doing right here. I'm okay with, again, if you're trading anything else and you put on 10 micros and you close out partials, 6, 8, whatever, put on, you wouldn't put on 10 here, okay? You would put on like 1 or 2. And then if it pops and runs without you, guess what? You're in that trade. You didn't miss the whole thing. You got something. That's what I'm getting to. You got something, okay? So if you've seen that happen a lot on the instrument you trade, where it pops and runs without you, it's okay to do this. It's very risky. So do not put on multiple trades or multiple contracts. Just do like a 1 or 2. Don't do your 10. Because really what we're waiting on, and it's going to put me in, really what we're waiting on is it to pull back. So I know right now I'm in. Now I have to put a stop because I don't have a stop. Because this could just be a big retracement again. I know that this can happen. It could pull all the way back. This is what I'd like to see, you know, and it could bounce, you know, it'll bounce in here off these levels. This is what would be great. This would be that big retracement back to the zone. And I don't know if that's going to happen or not. So right now I'm taking a chance. So we locked in, what, about 775 or 700? I don't know. I'm playing with bonus money now. It's free money Friday. And we'll watch and see how it plays out. But that's what I'm expecting. I'd expect more of a pullback and a retracement. Trend lines to trade, I mean, I could do one here to here. These are awful close highs together. I'd expect if it pulls back to that, then I'd be looking for a bounce. So right now I'm up. I need to change my order. It had 3 on there. Drop that to 1. So anyways, we'll see how it plays out. I'm going to drop to some of the other instruments. We'll come back here. And again, on that, look at where I'm in at. And look at where I put that added lot on. I did not make anything on that extra lot. But I didn't lose anything on it. All right. So keep that in mind. Because where we got in, I mean, we were fully protected. I lost a little bit on the overall. So we were in here. And this order's here. So whatever that difference is, I lost a little bit of money on that. But I took the chance to add a contract on. But when I added the contract on, again, it moved my order and I was protected. So no worries. It's, I don't know what you want to call it. There's no stress in that. I had no stress in that at all. I hope that's what I kind of want to point out. Got in down here. Yeah. When it broke, support. And then when it was up here, I was able to add one. It pulled the stop or moved the order. We moved the stop to a little better than break even. No risk. There was no risk in that additional contract at all. Relaxed trading. I wasn't stressed on it. I didn't really care. Okay. So took a chance. It just stopped there. And it stopped right at level. All right. So gold. We've been making all-time highs on gold. All-time highs, and it's still pushing. So these are the zones that I put. We've been in this, we've had this on there for a while, this 4-hour support resistance level. It's been respected multiple times over here. That's why it was drawn. It was drawn off of this high. So it was respected several times, respected here, did not quite get there, and then finally blew through. And that was yesterday. That's a 6 a.m. candle yesterday. Okay. So it blew through, and then we have nothing to draw above it. That's it. We have nothing to draw. If you look at the overall, we know gold's bullish. We've been bullish on gold forever. I think you popped to it. I could have popped to a daily chart. Would have been better. The gold's bullish. We know it's been going up since it started. I mean, that's what you expect with gold. I know. Yeah, you'll get big retracements. But I don't expect gold to go back to when I was buying it in 2011 at $1,000. Okay, it's way beyond that, and it's going to keep climbing. So it's making all-time highs. So what do you do with that? I mean, we can't draw. There's no downtrend line. We only have uptrend lines. I could draw another uptrend line here, which I will. I think those delivery guys are supposed to come between 10 and 10:30. So, but it's nothing but bullish. So how should we trade gold? Well, it's been bullish since yesterday, since really before that. And the market overall is bullish. So I would want to trade bullish. I'd want to be bullish trading gold. If it's in a good retracement or bounce off of a level, then yeah, I'll trade it bearish. Okay. Because we're down on smaller time frames trading. So what you have to do with it, like I said, it's like a flag on the top of Mount Everest. It's just up there. There's nothing above it. All right. So what you have to do is I dial down to a smaller time frame. There's a 1 hour. I can't really draw anything there either. I can't draw that off that wick and say that's the top. If I try to draw something there right now, like a zone or a support and resistance level, I'm basically saying that's it. That's as high as it's going to go. I can't pick the top for this thing. You can't pick the top for this thing. Nobody can pick the top and say that's it. That's not how it works. So I could go say, okay, during this 1 hour candle, which we have 3 minutes left, it pulled up and hit right there. That's all I could say. Is it going to go past that? I don't know. Would I like to see it go past that? Not really. I'd rather see it turn around and start to retrace and get in on a retracement play down to the zone. If we get in, or if you're already in, you want to keep your runners. I'm not in this right now. So where you have to go down to is that's where, 4 hour, 1 hour, 15 minute, look at the 15. Well, that looks different. The last 15-minute candles. Okay. When you look at that now, we are getting ready to close this candle. These are 15-minute candles. So over the last hour, these are the 4 candles. That one, look at that, wanting to push more. So these are the 4 candles right here that make up the 1 hour candle. So bullish swing up. That's nothing but bullish. Bullish candle with some sellers that stepped in. Bullish candle, sellers, buyers. Buyers were still strong on this candle for 15 minutes. Buyers were still strong. Then buyers stayed in play here, pushed it all the way up. And then boom, sellers. Or the buyers pulling profit. It's a combination. It's not just sellers come in the market. It's also buyers that bought at a lower price closing positions. That's something you need to be aware of. It's not just buyers. You can't just say, oh, well, there's nothing but buyers here, and then sellers stepped in. Well, the buyers that were in here become sellers. They close off their position. Okay, so you got to be careful when you just say buyers and sellers. So when we look at this, though, we're looking at the 1 hour time frame, the 4 candles. Well, we have a high. I could draw a high off that. We couldn't draw it on a 4 hour, but I could come in and draw this. And I like to go, again, I'm going from the wick of the green candle. Oh my gosh, there it goes. Right to test that level. How many like that? Is anyone in gold right now? That's a beautiful test of that price level. You can't make this stuff up. I mean, I couldn't have planned that any better. It's almost like I knew it was going to happen. But that's the price level that we mark now. That's our high, because we don't have anything above that. So that's what we have to do. Sometimes you can't, on the 4-hour time frame, you can't really do that. We're still, well, we just closed. So that's our 4-hour candle. Just closed. I am not going to mark that whole wick. Not right now. I'm not going to come in and mark this whole wick on the 4-hour candle. That's too big of a range. And I know the rest of the day may go back up to keep testing that high. Now, if it starts pulling down, if we get this to continue to pull down, and on the 4-hour time frame, if we keep getting it pulling down, 4-hour candles red, then yes, I will draw my zone off that 4-hour wick. But as of right now, no. As of right now, because I'm not trading that time frame, as of right now, I marked that off the 15-minute, and if it happens to shoot back up, that is where I'd expect it to turn. Because as again, we go down to our 5 or 3-minute, look at what just happened. We got a little trend here. I'm going to draw a couple of trend lines, pulls up, but look at how big, this is a nice gentle move up off of this turn. But look at how big these candles got. Why do you think they're getting that big? It's a fight. Bullish side and bearish side of the market. We're getting big swings. I think they took a break for a minute. I think they got tired. And then boom, we got big swing. Huge swings. And then you just saw this candle. This little candle that just started, it whipped right back up there to test that. Anyone who got in short in here, because I can guarantee there's people gotten short in here, were whipped out by that wick. So hopefully it wasn't any of you guys. A couple of you were in long, I know. Oh, are you talking about platinum on the stop limit? Yeah, a stop limit is above price. So if I put a stop limit right there, a sell limit. If I put a sell limit right there, that would have to be a sell limit if you want it to short. And that's if you're expecting it or wanting it to pull back, put you in short, and then go on. That would be a sell limit. And a buy limit's just the opposite. Buy limit would be down here. So as it's dropping, it puts you in. So the buy and sell limits are to take it in the opposite direction that it's moving. That's what those are. So I'm not in gold. I don't know. I know some other people are. 2 trend lines I want to be aware of that are on the smaller time frame is one I draw off here because that's what we're breaking right now. We don't really have to draw this one. This one would have been earlier off this move. You would have had one as it, creeped up. As it went up here, you would have drawn one as it made these lows. Well, then it just kind of popped through, pushed for it. Got sloppy there. But again, huge candles, all-time highs. You got to be careful where you short this because it may pull back all the way back up to that top. So for me personally, I'd want to wait for structure to build, and there's just none. So taking a trade right now short, waiting on it to pull back, my stop, here's something I'm big on. So seeing that this candle opened and whipped all the way back up there, where do you think I would put my stop or suggest it? I mean, this pulled all the way back. And if I want to get into gold and not be taken out by something like that, where would my stop be? Has to go above that high. So my stop would need to be above this level. That's it. That's where I'd have to put it. So you have to ask yourself, as you look to short gold, is that stop too far? If you were to take it right now, so if you were to take gold right now on this pullback. Said, I want to short it. Don't care what's going on. I want to short it because it just broke this. I mean, look at this. I don't care where you draw it, there. But I was looking at this swing right here. So pull back, red candle, green candle. I looked at that low. That's where we're pulling back to. We're testing that level. So is that going to hold up or not? I don't know. It remains to be seen on the next few candles. Can you short it right now? If you do, there is a huge level of risk. Okay. So just keep that in mind. Can you short it? Short it lightly. I wouldn't put full contracts on because it could whip all the way back up here. Your stop should be here. If you put your stop anywhere else, because I know some people will take that right there, and if they get in short, they will put a stop there. Just know that you're probably going to be taken out. That's if you were to short it. I'd wait for a red candle though. I don't trade short on red candles or green candles. I only go short on a red candle because I need the bearish side of the market to step in. So if it's green, well, the bullish side of the market's in control right now. So if the bullish side of the market's in control, well, I don't want to step in and go short. It's like jumping in front of a moving train. Again, we have the bullish side of the market right now in control. I don't want to jump in the way of that because I know what could happen. It could keep going. So for me, I'd have to wait on a red candle. If you put your stop, and never put it right to the tick, keep your stop above. But if you were to wait for a red candle and get a red candle and get in short, just know that you have extra level of risk putting your stop that close. Go in light with your contracts. Okay. I got a peek here for a minute. All right, so we're up 195. I'm going to move my stop on platinum. I'm just going to throw it to break even because I'm not watching it. I could do this right here. I'm going to put alarm that if it's crossing up, and I don't care about a candle close. I'd like to know if it crosses that. And guys, there's really no reason. I mean, I just set an alarm on this line to know if price crosses above that. Didn't really have to. I mean, I'm already protected. Free trade right now, risk-free trade. So I'm already protected on it. I just put that alarm there because I'll come back and peek at it. And I don't know why. Again, because, again, it's a protected trade. So I really don't have to be concerned. Oil. And I'm in oil too. Looks like I don't have a stop on that. That's dangerous. That ain't what I wanted. Hang on, guys. Sorry. Just bear with me for a minute. I told you I'm not 100%. I thought I was. All right, so we got a small trade on that. I think I put a pending order in there is what it was, and I don't know why. Yeah, I did. I don't know why the stop wasn't on there. That's where it is on the 4 hour. Overall, it's been bearish with the huge pullback. And you guys know we broke out. We were bearish really good over here. Nice swings. And then it broke that trend line. And the trend line was drawn from this high back here to here. And then we had a huge swing back. And then it actually, that order was taken out, turned right there. And then when it turned there and started pulling down, well, that's when I drew that trend line off that high to that high. All it did on this pullback was tap around that level. So again, we had a nice bearish move with a huge pullback, and then it resumed its bearish direction. Okay, where did it resume the bearish direction to? 4-hour trend line. Tapped it, turned, we marked that level. So far on the 4-hour, that's where we're at. Now you'll notice I'm excluding that wick. The reason why I'm excluding that wick, this does nothing for me. That trend line right now really does nothing right now if I draw off wick to wick. So that's why I exclude that. So again, when I redrew stuff this morning, and I have it here, it should be attached here. But that's why I exclude that wick. I looked earlier, I saw this. I saw all the bottoms of these wicks and candles right along this level. And I also looked past that and saw these candles here. So I know the wick's there, and that's where this price level comes into play. I have a gray zone there, and if it drops through this green one, I'll recolor this one green and that one yellow. But right now, it's pulling bullish off the bottom. So that's the way we would want to trade it for the day, but it's actually at the top. So I actually had an order to short up there, and it just didn't pan out. It wasn't ready to turn yet. But that's a good price level to be aware of. Let me pull that back. It's this right here. And that turn is September 6th. So about a week ago, that turning point. So that's where those highs are marked. That's what I got for basically a mid zone or yellow zone. Just because it was up around that level this morning. And then this is the zone up above it, about 71.50 all the way up there. If it breaks the yellow zone. Now, as you go down to the smaller time frame, I could see it pulling back here, retracing back to that trend line. So that's what I was hoping for that we didn't get. It's just not ready to go. So we had big swing, but that was 9 o'clock in the morning, right here where it tapped that zone. Around 9, pulled off of it, pulled back on the pullback. That's where you'd want to get in. It just didn't go. So my order just got popped because I had a tight stop on it. But what I'm expecting it to do is go more sideways or pull back to this level right here. If you go out to the 10, you can see it a little bit better. So I don't know if it's going to break through this yellow zone or not. So my trade idea would be if it does on a 3-minute make a lower low, lower high, I would short it. And that's really what we've done. It's really pulled down and made a lower low than these. And then now it's come back to make a lower high. So the next red candle, I'm probably going to short it. Let's see what we're doing on a 3. Yeah, I'd want to short that. And again, I don't know. I mean, and I'm trading a retracement. So keep that in mind. It's bullish right now. We have an uptrend line. But if I trade this and trade it short, mark it up as a retracement, use a retracement line, I would only get in short, riskier trade because I'm trading against the overall trend, but there is enough room in here to profit. Okay, so trading retracements is fine as long as there's room. And my first target should be like the inside of this bottom. It may only get that far. So if I do happen to get if I get a bounce here and a red candle, I'll take it short. How long do we have? Yeah, we got 7 seconds on this candle. So I can almost guarantee that is not going to close red. It'll be green. So what I really want to do is wait for a red candle. If we get a red candle in here, then I could look to short it. And my target should be here. That should be my first target. I don't think I'm going to have to draw it. I like to wait for a red candle to close. What do we got? So at 18 after, I need to remember to come back and look at this. I was going to just put a price alarm in there. What are we at? We're on oil. I used to have a 3-minute timer that would go on. All right, bear with me here. You guessed it. I'm setting a timer. And we'll come back here in a minute. So far, that's, again, that would be a retracement trade. Retracement trading is fine because retracements are going to happen. We know they're going to happen. I love trading retracements because I know that things will pull back as long as you have the retracement set up. Again, if I think it's going to retrace down toward this uptrend line, that's my thought process. What do I need to see? I need to see lower lows, lower highs. Well, we definitely have a high. We have a lower low than this area, and we have a lower high. Okay, so that's all I need to see to get in. That was the entry candle. It's just pulling back off that. So when it gets around these zones, a lot of times the zones will act like magnets. So what I would have to do is see a red candle, and it just doesn't look like it's going to form yet. So we'll come back and check here in a minute or so. I'm just going to touch on gas. Is anyone even trading gas? I know some people are looking at gas. That's why I wanted to touch on it. Basically, I have this level here as a zone from back here, and that is from July, about July 20th, something like that, 22nd. So that level right there was respected here as a few times as resistance. We're coming back to that level. That's why I wanted to mention this. So it is coming back to that level. And then I also had this 4-hour support resistance line, and you'll see it says 4 touch body closes. What that means is right in here, as gas came back up, it turned right there. Okay, we had a body close. Then the next one just opens at the same price. So bullish candle closed right there. Bullish candle closed right there. Bullish candle closed right there. And bullish candle closed a little above. Well, I see a pattern. I think everyone should see that pattern. 4 times it hit that price and stalled out and turned. That's a price level I need to be aware of. So I'll draw that line. This was drawn a while back. I didn't just draw this morning. This was drawn a while back off of those price levels, that price level. Need to be aware of it. Need to be aware that that may be a major turning point as it goes up and hits that price level. It gets near. May not go all the way to the zone. And if you look at 3 of these, they did wick up. During that 4-hour, when this candle opened, it still opened bullish. Went up and touched it. This one bullish. Went up, almost touched top. This one, this candle here, wicked up to touch the bottom. So we have to have both these levels on our chart. The box, the zone, and then the line, the horizontal line at those highs. Mark them as a 4-hour level so you don't erase them on a smaller time frame. But that's where we were at. And that's why I wanted to mark that. As you look, we're magically right there. So that's why we mark these levels on the 4-hour time frame. Don't just come to the chart, open up your computer and jump down on a 3, 5, 10, 15, whatever, even a 1 hour. Always go back out to the higher time frame. See that. So if you are to trade it short, again, we would be down on a smaller time frame looking for bearish structure to form. My one main target would probably be right there. That would be one level I'd need to be aware of, and this would be one level. So my close partial is going to be either here, in this level right here, and then I'd probably close one out there, and as it goes down, close one here and there. Be aware of that level right there, because we had a big bullish candle, and all it did was it only pulled back to that level. So again, that would be a closed partial area on this. So the 4 hour looks great because it, again, nice big green candle, pulling up to that level as it turned on these other ones. So by drawing these on the higher time frame and having them on your chart, it should be no surprise why things turn, why they stall, why they stop. You should not be surprised. So this is all about putting the odds in your favor as you're trading, not being surprised at when things turn. And because if this pulled up and you don't know about it, and you pull your stop up tight or whatever, you look to get into a long on a smaller time frame, and it turns and stops you out, you cannot be surprised, because I've seen that before where people go, why'd this turn here? It's like, look to the left. Just look to the left of your chart. I don't recommend anybody. It bugs me. Everybody does it. I know they do. I don't. When people trade on their phones and keep their phones vertical, they don't see enough candles. I've had people send me charts going, I don't know why why did it turn? It turned on me all of a sudden. And I just tell them, I'm like, turn your phone sideways. Right. Hang on a second. All right, guys, I need furniture guys are here. I will be right back. You're just going to look at my blank chart here. And let me just go show them where to put stuff. I'll be back. All right, guys, I'm going to have to go. Third trade in platinum. You're in platinum again? I need to go look back at mine. So, again, with gas, I was looking to short off that. And we're already actually falling off. I don't like the way it looks on a 3. So every time it goes up to these levels, that price level, you'd be thinking short with the possibility of it can go to the zone. That's the only thing you have to be aware of. And then this was actually a news release there was a news release yesterday on gas. And I know the news releases are posted now out in the news talk area. So you should be aware of when they come out. Well, there's news releases. There's news release calendar for each of the each category. So there's news release comes out on currencies, on energies, indices, and there was one that came out for the natural gas. So that was the news candle off that. And we just had a nice push back up all the way to that zone. So that's how I would trade that, is every time it pulls off that 4-hour support resistance level, take it short, but keep in mind there's a possibility it could go all the way to the zone. That's your risk on that. I need to see where we're at in platinum. We got stopped out, didn't we? Because I know MC said he's already back in. Yeah, so I got stopped out on that short. So it's pulled back up to test that level. Are you in short again? I like, for structure buildup, I like to see like right now, because I put that short on. We were in platinum long from down here with 2 contracts because I added here. So I put 3 here to go short. And so it closed out the 2, put 1 in, and then pull back. Well, all it's done is pull back up to test that level. So if anything, I would go ahead and I'm going to short one here with my stop up here. Is what I'm doing with it right now. Your MC's in long. Oh, we'll see. And I might be making a bad decision, but I just came back and I've got to get, because the movers are here and they've got a lot of I didn't know my wife ordered so much furniture. That's what happens when she goes shopping and I'm not with her. So she ordered a ton of furniture for this other room. So we'll see what happens. I just went in. I'm going against the trend. I think the retracement may still be in play. I would move that line out to here. If I get that other tool off there. So I'm moving my retracement line out. So for me, I'm thinking if this still retraces, if it's in a retracement, still retracing, then I should be in short every time it pulls back to that line. So every time it pulls back to this retracement line, I'm going to get in short. Only when it breaks that would I be thinking the long move is back in play. Okay. Is oil going up still? Yeah. So oil broke the retracement line that we had and then broke through. Anyways, I got to go. So I'm going to have to kill the live, but I'll be back in the Discord here probably about half an hour. So I hope you guys enjoyed this. I'm glad we got to see have some trades on, and then we actually had some things happen that worked out good for me to demonstrate a few things for you to look for in the market. All right. So I will talk to you later. Everybody trade safe.